So, you want to dive into the world of the stock market this 2023? Wise choice. Well then, you've come to the right channel. Investing in stocks might be daunting to some, but with the right knowledge and guidance, anyone can do it. If you're new to this game, this video is a great way to start your journey. Hello future investors, ready for your financial breakthrough? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and bring you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. Okay, so a lot of people want to dive into the world of stocks, but a few only succeed. A few only continue because they approach the stock market with knowledge, discipline, and patience. One does not simply succeed in the world of stock market because of sheer dumb luck. It requires a thorough understanding of market patterns, corporate fundamentals, and economic variables. Those who commit to continuous research and study increase their chances of making good choices. So, if you want to be part of the few people who are successful in investing, grab your snacks and sit comfortably. Without further ado, let's start with number 1. Educate yourself. Know what you're getting yourself into. Understanding the stock market is important before diving into the world of the stock market. Investing in stocks is not a child's play. There are real-life risks involved in the market. The stock market is a complex and dynamic environment in which rash judgments may end up in major financial losses. And of course, you don't want that. We want to make money, not lose it. Understanding fundamental principles such as how stocks are priced, the impact of market trends, and the associated dangers, as well as fundamental terms like what is the dividend, what's the market cap, and what's the PE ratio. What about the return to equity, limit order, stock market order? You have to know these things. You will have a very hard time if you're not able to understand these and won't make well-informed decisions. Another thing, it's common knowledge in this world that stocks either go up or go down. Hence, there are risks and rewards associated with it. You have to be aware of these to prevent risk and impulsive decisions. And of course, what is educating yourself without research? Researching is crucial if you want to invest in the stock market. You should know where to invest, what company, the growth potential of the company you plan to invest in, the company's position, and a lot more. Knowledge of stocks is important and is the foundation behind successful investment in stocks. It gives investors the skills they need to understand, analyze, and navigate the market's intricacies, supporting educated decisions that are consistent with individual financial goals. Number 2, set very clear goals. Alright, so now you have a clear knowledge about how the stock market works. Now, it's time to set very clear goals. Clear goals give investors direction, concentration, and an overall strategy to help guide their decision-making process. Investors who do not have established goals could fall victim to emotional trading, a lack of discipline, and an inability to keep track of progress. Venturing into a new chapter also comes with deciding what your investment goals are. It helps you to stay focused and make better investment decisions. Now, ask yourself the question, why am I going to invest in stocks? Will you start a business? Are you going to save for retirement? Or do you want to build yourself a wealth empire? Do you want financial independence? Remember that your goal should be specific, achievable, and time-bound. For example, I want to reach $15,000 in the next 5 years. It's not ideal to invest just to invest. You will get nowhere and will not be fulfilled. By setting goals, you can keep track of your work and see progress over time. This will help you stay motivated to continue investing and have different investment strategies as needed. Number 3, think long-term. The stock market is a long-term investment. Thinking long-term is essential to successful stock market investing. Sure, you may earn quick money by day trading or swing trading, but those tactics will simply swing your money away and are not ideal in the long run. If you want to build wealth in the stock market, you must think long-term. When you understand the importance of long-term investment, this will help you determine your strategy to invest or if you should be investing in the first place. When you invest for the short term, you face the danger of not having your money. Short-term investors out there may have unreasonable expectations regarding the growth of their money. Furthermore, research shows that the majority of short-term investors, such as day traders, lose money. You are competing against powerful investors and well-programmed algorithms that may have a better understanding of the market. Another thing, the market fluctuates from time to time. The companies and industries you would want to invest in go through stages of expansion, decline, and recovery. Long-term investors can recognize these patterns and position themselves to profit from the rise of innovative sectors or firms. Number 4. Diversify your portfolio. Diversifying your portfolio means making investments across different kinds of assets. I'm sure you've heard the old saying, don't put all of your eggs in one basket. Each investor, whether you are a beginner or experienced, should aim for diversification. And you may ask, why is that? Investors can reduce risk and increase the potential for long-term growth by diversifying their investments across asset classes, industries, and geographic locations. As Warren Buffett also said, diversification is a protection against ignorance. He suggests that the purpose of diversification is to protect yourself and your money against unforeseen shifts in the market and individual stock fluctuations. And it's true. I mean, think about it. Market fluctuations are inevitable, and if you put all your money into one company and because of market fluctuation, they went downhill, you just lost money. You don't want that. Having a diverse portfolio is the sole foundation of a smart move when it comes to the stock market. Diversification's primary purpose is not to maximize returns. The main objective is to minimize the fluctuating impact on a portfolio. Number 5. Start with what you can afford to lose. Now, here are the next questions for you before you start investing in the stock market. How much do I need? How much should I invest? Another fundamental principle you should remember when it comes to investing in the stock market, especially if you are a beginner, only invest with what you can afford to lose. Right now, you may be thinking about how much you would start with. Well, there is no minimum amount of how much money needed to invest in stocks. But most experts suggest starting with $200 to $1,000 while diversifying your portfolio. Additionally, you should invest depending on your current financial situation. As Mark Cuban, a billionaire entrepreneur and owner of NBA's Dallas Mavericks, said, "Only invest in what you understand and never invest money you can't afford to lose." You should know what your tolerance for risk is. How much money are you comfortable investing and losing? You should understand this very well to prevent rash and emotional decision-making when market fluctuations occur. Investors who appropriately calculate their risk tolerance can construct portfolios that are aligned with their financial goals. This technique reduces the potential impact of severe recessions by preventing overexposure to high-risk assets. Number 6. Don't decide based on emotions. Deciding based on your emotions will be your ultimate downfall when you dive into the world of investing in the stock market. It can lead to harsh and detrimental outcomes. Remember that in investing, you should have a sound mind. Benjamin Graham, also a famous investor, once said, "The investor's chief problem and even his worst enemy is himself." Fear and greed are two emotions that may distort judgment and lead to rash decisions. A fast market drop may cause panic trading, while a speedy climb might tempt one to chase the next big thing. You know that feeling of euphoria? Yep. These impulsive reactions frequently result in losses and missed opportunities. Remember, rationality over impulsivity. Well then, that wraps up the basics on how to start investing. We hope that the beginner investors watching this video will always be reminded of these 6 important lessons before investing in the stock market. What are your takeaways from this video? Comment down below. Are you an experienced investor already? Leave a comment for our future brilliant investors. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our next videos.